Hola, everybody. March 15th, Money Lines here with Jeff. All right, so let's take a look at what happened on March 15th. So it's a dividend date coming up. The stock's going to come down a little bit to pay for the dividend. And here we go. So we get our SPY opening price. We come up into a double layer of money lines here, and you could have had a nice short. And that short would have went right into our green money line, so 0.3%. And you can say, whoop-de-doo, whatever. Well, why don't you take a couple of 511 contracts and see what kind of profit you can make coming down to 509.5, and you'll probably be pretty happy with the results. Or I can, spread the chart out like that, make you see it a little different. So let's say you got involved in this, and you got a little push up, it came underneath, and you could have executed again, taking some profit off the first push. Also at the same time, you came underneath, you came back up, and you could have just said, you know what, I'm going to cut this trade because you should have already been profitable from this nice wash, and then of course it pushed back up. Fine, so be it. And then, of course, later in the day, look, come underneath, head bump, come down, nice extra little something there if you were still involved. And we'd have to see how that correlated with Qs. So now that we are speaking of the Qs, let's check it out. Okay, so what the Qs do? Qs opened up off of a level, off of a money line. You even had a nice little push here. I know everybody's like, was there really something? Yeah, again, some of these pushes, they're nice. They're nice, quick, premium pushes, take some profit. Yeah, it came underneath. Look, it give you the opportunity after, fine, you took some, you executed a contract, right? Anywhere and here, right? It's trying to hold. Look at it. It failed. It comes underneath, came back up, cut your trade, take minimal loss because you should have been executing on the money line, executing, right? And you should have been taking some profit off those first pushes. Anyway, several opportunities there for something to happen. And again, if something crazy happened and you needed to cut the trade, you had a chance, and you had the chance to take the short here and get paid, right? So, and then again, messed around a little bit. And again, when dividends happen, it throws some wrenches and things. Apple, let's see what happened on Apple. Maybe. So right before the market opens, you see a strong drop. Look at this. Right, bam, into our support level. So of course, as the market opens, you don't really have opportunity because institutions, oh wait, they're not supposed to enter in pre-market, are they? We know they did. We know they do. Here they are. They got in. A nice push up into the 5 EMA and a money line, and a short just happened all the way through. All right, we'll keep it moving for AMD. No real level there. Push through some EMAs, and nothing really happened. It did show a little bit of strength today, but fine, so be it. Softy, this was one I took, so I'll talk a little bit about this. I was watching some of this pre-market action. Look at these. We have into the close yesterday. We lost the close. We also lost this level, and I was looking at the money line and the 5. So here we go. You get a strong wash right down into the 5. You could have took this coming back up, and you could have been taking some profits as you come back into this resistance. Then we actually hit the money line, and this was an entry that I had right here on the money line. And it went back up, and the 5 was probably chilling here, and it probably got rejected at that point in time, but you can kind of see it now here. So it lost the 5. It comes down. Strong wash. Oh my God, do I cut my trade? No, I don't cut my trade. Why? Because we know it wants to come back to the money line. Now, here I was looking at it basing. I entered. Oh my God, I got washed again, right? Why did it wash again? You see that? It didn't matter what anybody did. The market makers made it come down here into the 9. Okay. This was a valid level, and we'll see it at the end of the day. It was a valid level. There's nothing wrong with this trade. Yep, I was down quite a bit. Yep, I was down a lot bit more. And you know what I did? I averaged back in. I actually made this trade come from here, go all the way down to here, and come back up in here. And it was a green trade, not off of puts, off of calls. Was it nerve-wracking? Well, it certainly could have been. I wasn't happy, but I didn't freak out. I figured I had it made. It was coming back in here, and it did. So then what did it do? It came back in. I cut my trade and my green. It comes back down. I wasn't interested in puts. I was just leaving it alone because I saw the dip. I saw the strong dip. I saw the buyer step in here. And then what do? We push back over the level. We have the strength. Valid level still came back, bounced off of this. I mean, this could have been another valid trade. But again, this is just a lesson in not freaking out about the money lines, knowing we're going to come back, knowing we're going to have an opportunity, and taking those shots when it happens to make sure that we can, even some of the best trades are trades that are close to even. But I just happened to get green. So I was very happy about this trade, and I was very happy about the way I managed this trade. Tesla. So Tesla, Stressla, same thing, bounces off of it right before the market opens. You can see it there. Yeah, you could have entered, but that would have been a little costly, But, if you got this nice push down here or you took a market order, as we've talked about, sure, you could have got this push up. You got to pay yourself on some premium like that. I mean, that's strong premium pushes. Come on. Came back down. Okay, what if you took this trade? Take a look here again. So what? You took this trade, it failed. It came down, it came back, the level's still valid. Cut your trade out. Fine. You take a little L or you get break even. So what? So what? Right? Okay. And then it messes around, shoots back through. What's it want to do? Come back, test again, come back up. It's still showing weakness, but in general, Tesla's all over the place lately. I think they're just starting to gather some investor money. We're down by the 200-week moving average. That's right there. So you're seeing some of those people step in. And they should. I mean, if you're a long-term investor, it's not a bad place to get in. Okay. NVIDIA. Okay, we have our money line. So first and foremost, we ran right into this moving average, get a drop down. Ran into the money line, you get a drop down. Again, very deceiving charts, as always. I don't even know what kind of percentage drop this is, but let's just say we took an 882.50 put. I don't know if that's the one, but let's just say we took an 882.50. So we're going to take some profit there, half a point. Another strong push, 1 point, all the way down 1.5. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes, 1.5%. It's pretty damn good, right? Even if you took some out of the money, even if you took some 850 contract puts, you are still green as heck on a push like that down. And you got to pay yourself. Strong washes. Come on, people. Yeah, it pushed back above. If you didn't pay yourself, well, then you didn't pay yourself. And then you got back above, and at the end of the day, look at that. It had bumped again, tried to come in, tried to ram back up. So level's still valid. Now you're getting trapped between moving averages. That's what's going on. The Dow, a little funky, a little all over the place. Again, dividends are coming through. And we're not going to take a look at Amazon. Let's see what's going on with gold. Ooh, back into a wedge. Okay, so we have our level. Still a valid level. We are, coming, look at this. See, this wedge is very tight. So we're going to find out what happens here, right? So you might have to pick a direction here pretty quick. See it? Getting tight and breaking out after hours. So where are we probably going to go? You got it. We're going to break up. Here's our target for our pennant. That has already occurred. Breaking out. You could have already been in it, but this is we'll have to see. This is aftermarket stuff here. So let's get into regular trading hours. See if we can see it a little differently. Okay. So you see it now in the regular trading hours. It takes off all the extra hours and all the extra spikes and bull crap that's going on. So again, getting tight, back and forth, back and forth. If it breaks out, there's our target, 204.51. All right, everybody. I hope you traded well, traded safe, traded appropriately, didn't freak out. We'll catch you again another day of Money Lines. Take care.